Hi traders, welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, we're talking all things gold as the technicals are setting up for a little bit of an interesting week to come. Obviously, US is not in the markets today and we're starting to see that US dollar sort of gain a little bit of strength. Whether that will follow through to the entire week, that will be the question that we ask. But we do have some important data sets coming up that could obviously push the US dollar price. Now you can see here I've got the gold screen here. I'm looking at gold on a daily time frame at this current moment in time, and you can see that we're at a really important resistance level, which is this trend line resistance. Now the trend line starts from the high that formed back in May of 2023. I intersect around about the 27th of July 2023. That then spans out into this area here. Now this area here could be a little bit of a sticking point for gold, as if we look left, it could actually act as a key area of support and resistance. If I was just to grab a line tool and I was to draw that line from the back there, we can see that prices interacted with this area before. We found resistance here most recently, but we found resistance here, we found support and support. So prices come into around about the $19.42 area, somewhere around that, around about the 1944s, and we found that resistance. So is that going to act as resistance again, considering the fact that we've got multiple confluences here at this point? No, we just have a potential here for a technical move to the downside. Now we know that the dollar's strong at the moment. It has been strong. It's continuing its bullish phase. We know that the US dollar index at the moment is trading considerably higher, around about the 104s at the moment, and could be heading towards the 105 key highs. If it does, that could push dollar-based assets to the downside, and commodities like gold could be affected. That means that we could see gold prices come a little bit lower. Whether we come all the way back down into the sort of $1,900 level, that's a different conversation, I think. But from the short-term view, we could maybe see price come into this area where we recently consolidated. Now, if I go down into a 4-hour time frame, that zone that I'm talking about is in and around this area here, which is between the sort of 1910s all the way up into the 1925s. So if I was to actually map that out a little bit better, it would look something like this. Now the reason why I would consider that area to be important is because the characteristics of what's happened. So we came into that sort of $1,900 zone, we broke back above it, we rallied. So we know that buyers are in control of the market here. What happens then is we consolidate once again. Now, a consolidation for me is where price has a battle, or let's say traders are having a battle between each other, the buyers and sellers, to see where price could go to next and whether we're at fair value. Now, when the market accumulates, that's the market telling us that they have found their fair value. They're trading between particular areas. When price breaks out of one of these areas, though, it could mean that there is a significant or overwhelming factor in one side or the other. Now, we know that buyers won here. We know that because buyers, the market has traded higher. We saw a breakout to the upside and price has traded higher since. Now what that does is it accumulates volume in and around those areas, and what we usually see is price will come back and test an area of volume before it then goes to either direction. So I'm looking to see, we've got a consolidation again, but if price was to trade outside of this consolidation, does it then travel to the other side? So I know that here, for instance, there'll be a pocket of low volume. That low volume pocket could be filled quite considerably or quite quickly if it was to trade through this current zone or these current lows, which are around about the 1934. So what I'm saying is, on a short-term basis here, gold could push down from the 1934s to this pocket of volume around about the 1925s. What it does then is part of a bigger conversation. If the US dollar index continues to rally and breaks through considerable areas of resistance, then yes, maybe gold will push to the downside. From a weekly perspective at the moment, we've got to look at it as, yes, we created a bit of a lower low there. Are we going to create a lower high and continue to make those lower lows? That's the question at the minute. At the moment, I think it's a little bit too early to tell that. If that fails and we see that this consolidation here fails to break lower, because you can see that we've actually got a cross of the 50 moving average and the 200 moving average on a 4-hour time frame, which I think is again fairly significant. But if that area there was to fail and price was to trade outside of that, then the next high of interest is going to be this 1980 spot 50. So I'm going to put a bit of a caveat on that, because as traders we need to be a little bit more reactive to how price reacts. There you go. And if it was to trade through that level of resistance, then obviously the market could go to the next point of resistance, which I've got marked in as the 1980 to 1980 spot 50 at the moment. So that's something to consider on gold. I think from a technical basis, there are both sides to consider. I think the dollar's getting stronger at the moment, so that is also something to really factor in, that price may trade a little bit lower because of that. And if it was to do that, the target area should be this pocket of consolidation. Hopefully that all made sense. If it did, please leave this video a thumbs up. We really appreciate it. Comment down below, where do you think gold's going to be in the next couple of weeks? Thanks for watching this video update. I'll catch you in the next one.